All right. Hello, everyone. Welcome to the stream. I'm James. Welcome to Sunday Night Live. We're 5 minutes early, so I'm going to just run through a few checks, but welcome to everyone, and it's great to see you. Thank you very much. Control Alt Alpha. Nice to see you, and I'm glad you're here. Thank you very much for attending. So, folks, we'll start in a few minutes' time. Not much to say until everyone's in, but I'm just going to check sound. And if you are here, please just type something up in the chat. Let me know that you can hear me well. And if that is the case, then we've got the sound sorted out. And I think the visuals are good too. So let us know in the chat. Say hi, say hello to everyone else and to me. And hang out. So if you're watching this video as a recording, you're going to have to wait 5 minutes. You can scroll forward 5 minutes to the beginning of the actual stream. This is just a greeting and sound check. So thank you, Dunwat. I appreciate that. Thank you very much. Nice to see you. Haven't seen you around for a little while, I don't think. Hi, Lucky. Nice to see you, mate. Well, I mean, Dunwat, I've seen you around, but I'm not sure in the live stream per chance or per se. So, of course, I've seen you around, naturally. So it's a great Sunday evening, and there's all sorts of exciting stuff going on. And if you've been trading Bitcoin and watching what's going on with Bitcoin, just a few hours ago, we had a big smash down below the current recent support down to the 786 fib and bouncing out of there dramatically. I'm going to try and get some more longs on Bitcoin later on today, probably straight after the stream, actually. And that's when this 4-hour candle will close. We'll have a look at that closely shortly. So we're talking about Bitcoin, natural gas, some news on natural gas and oil. What are we going to see at the open? We're going to see a gap up or a gap down. There is some news that's come in, and I got wind of that through the private group. So thank you very much for those of you in the chat, private group, monitoring the weather situation to predict what might happen at the open on natural gas. Are we going to gap up, gap down? What's the weather doing? Looks like we've got some warmer weather incoming. So maybe we'll gap down. So hello, Lucky. We'll talk about this. Heman, nice to see you. Sounds good. Michael from Poland. Wonderful to see you. And Olem from Germany. So loads of folks from all over the world. Martin from Germany as well. Hello, Martin. I think you're still in Germany, unless you've left like many others. All sorts of people leaving Europe right now. Understandably, I suppose. There's a mass immigration of people from Europe. Also a mass immigration of people into Europe. So interesting times. Hello, Lucky, you said hello already. And Kiran K. I almost said Kirank. Nice to see you, Kiran. And Sri Taman, we said hello. Nice to see you. Portugal, Augusto Ramos from Portugal. I've got a fascination with Portugal. I thought I might go and live there, actually, and I'm very interested in the Nazare or Nazar, depending on your pronunciation, the biggest waves in the world. There've been some good surf on there at the moment, just a few weeks ago, a couple of weeks ago, a few days ago, actually. So good stuff in Poland. Emil, nice to see you as well. And Quanto. So it's lovely to see everyone here in the chat. Folks, as I said, we are starting in a few minutes' time, in about 1 minute now, I suppose. So I'm glad that you're here. Great wave, yes, great wave at Nazar or Nazaré in Portugal. I've got a Nazaré t-shirt or a pullover that I purchased from the World Surf League with a big Nazaré sign stretched right across the back. Okay, folks, we're about to start, so strap in. Welcome to everyone. As I said before, if I haven't greeted you already, a few more names coming in, which I haven't said hello to, but we'll circle around back to that at the end. A couple of interesting things I want to talk about today. I am going to wait for precisely the top of the hour so that no one moans about missing out on the news. In the meantime, I'll take a sip of Red Bull and get my voice box tuned up and ready to go. Lovely stuff. All right. NatGas Monday down. It looks like it. It looks like we may have a NatGas down on the open, but we'll talk about that shortly. I'll come to natural gas at the end. So, folks, I'm going to switch across to the charts. Actually, let's start with this page. I want to go through I want to sort of set the scene for what is going on in the markets for the rest of this year, going into December, into Christmas, for those who celebrate it, and then into early next year. Which way is this market going to go? Are we going up? Are we going down? What are the concerns for the downside, concerns for the upside? I want to go through that very quickly with you so that you understand a little bit about the sort of scene that we're setting, where the lines in the sand are, and how we're going to trade this. So in order to do that, I've got a little sort of note up here, which I can put up for members. If you remind me, I'll put this in the private group for you as well, so that you can check it out. So I'm going to read through this with you very quickly and zoom into it and start at the top. So I'll go right back to the top. And I hope you can see this on the screen. Here are 5 I'm going to give you reasons why this market might be carrying on to the upside, booming, rallying, asset prices increasing, and I'll give you 5 reasons why this might not be the case. And you need to decide for yourself what you believe is the correct direction for these markets, and also decide for yourself where you might be wrong. In other words, when the price reaches a certain level, if you're long, where will you cut that idea and start to look to go short? And if you're short of mind, how high does it have to go before you cut your opinion or change your opinion and then switch to long of mind? So here are some reasons for both. First of all, 5 reasons why a boom in the economy might occur and asset prices might rise in coming months. And I'm talking about now into December and into early part of next year. I don't know beyond the first quarter or maybe the first half what will happen. I'm talking about basically the next few weeks into the first quarter of next year. Number 1, monetary and financial conditions are easing. And I'm going to show you the chart that I showed up on the screen when we scroll down. The organization, I'm not going to read all the details here either, the OECD notes that global financial conditions have become more supportive with buoyant asset prices, improved credit provision, and low corporate bond spreads. Okay, so easy money and credit tend to boost the economy. Number 2, mega structural investment in AI and technology. Some calling it a boom or a balloon or something that's about to break, possibly. But let's read. BlackRock argues that mega forces like AI, BlackRock amongst many, of course, and the green transition, I am a little skeptical about that myself, are transforming economies and providing strong uplift to both growth and markets. So another reason, mega investment in these fields, AI and tech, and so on. And then number 3, projected moderate policy loosening. I want to focus on this in a little bit. We've been going through quantitative tightening. The Fed has stressed or emphasized that QT is now over, and naturally one would think that QE, quantitative easing, will follow. We'll have a look at the chart and get some ideas on that. It's 2026 year ahead outlook from JP Morgan expects the Federal Reserve to cut rates 2 to 3 times during 2026. And on this Wednesday, we've got another meeting coming up on Wednesday, and we'll find out whether we're going to get a rate cut, one of several to come, maybe. I don't know. I think it's very, very likely. And if you look at the Fed Watch tool, that's about an 87% chance of a rate cut. Anything above 80 generally is pretty, firm, cemented. So a rate cut in December and maybe 2 or 3 more next year. Point number 4, strong employment and growth, rebound in key economies. So economy growth, 2.2% growth in 2026, maybe. GDP and improved employment conditions. Doesn't look like it the way the data came out last week from the private employment companies. And number 5, liquidity and investment risk appetite remains elevated, I'd say highly elevated. The OECD also points out that risk premiums on equities have fallen, etc. And the summary of this is when investors are comfortable taking risk and liquidity is abundant, and we'll find out about that shortly, asset prices generally rise. Now, let's look at the flip side, and we'll go to the chart straight after. 5 reasons why the economy might stumble and asset prices might drop in coming months. Talking about the rest of this year into the end of the year and early next year, first quarter. First of all, valuations are very high. We all know that. Assets are overpriced, according to some or many. Number 2, global headwinds and decelerating momentum. The World Bank always, as they often do, it's their job, I suppose, the watchdog, and others project growth to slow down. It doesn't matter all that much if the US growth continues to dominate and grow. If we do get 2.2% and the rest of the world slows down, there's the feeling that, when the US sneezes, the rest of the world catches a cold. but it can be when the rest of the world sneezes, the US catches a cold too. It works both ways sometimes. So slow international growth. 3, rising geopolitical fragmentation and trade tensions. Okay, yeah, tariffs and wars going on. And when trade and cooperation break down, costs can rise. Number 4, tighter financial conditions and hidden leverage. We talked about leverage unwinding, particularly on Bitcoin, massive unwinding of large, highly leveraged positions. And there are always some of these floating around, and it just depends where they are, how big they are, which sectors they're in, and where they're the most vulnerable. Massive leverage, which can be unwound by either a short squeeze or a market collapse when leverage just completely unwinds. And number 5, market labor and productivity disconnects despite capex, etc. If businesses spend but don't hire or grow output, the growth engine may be stalling. And that is a reason for some of the concerns about the AI sphere, in that it may be that all of this investment is leading to something of a damp squib, and that the growth in these sectors and other sectors as a result may not be as strong. And now we have to talk about quantitative easing. So easing, I keep on saying easing. I want to show you this chart. First of all, let's read this. How QE tends to affect the major asset classes. We'll read about that. To butterfly QT's hammer. So this is what QT, quantitative tightening, looks like. When the Fed runs off its balance sheet, in other words, dumps assets and money, pulls money out of the system, essentially, it puts pressure on the market. Then we had the COVID blowout, and then since then, over the last, I suppose 2 years since COVID, 2022, 23, 24, let's say 2 years, 23, 24, the Fed's been unwinding the balance sheet, as you can see. But we've come back down to the May 2020 level after the repo market blowout, and it's basically a support level. We've come back down there, and we've heard from the Fed that they're going to stop quantitative tightening, and normally you would expect that QE, quantitative easing, would follow, as it normally does. And so we haven't heard about that yet, but we do know that QT is coming to an end. Now, I want to read a few more things down here. What happens when we do get QE, quantitative easing? What happens? All right, so this is what it means. QE involves a central bank purchasing long-term securities, treasuries, etc., which lowers yields by increasing demand. And firms benefit from this from relaxed financial conditions. So I'm not going to read through all of this, but there are various implications. Basically, we're expecting assets to move up, something like an everything rally. I think they even used that word in this assessment. And I'll put this whole thing up into the members' private group area, where you can have a look at a close, more detailed level. And it also affects things like natural gas, oil, energies in general, metals, stocks, crypto, the dollar, everything. Dollar down, everything else up is basically the idea. So that's what's going on. Now, I want to go to the charts, and I want to tell you what I think before I go to the charts, actually, is that I think that we're more likely to see a boom in the economy. And I'm going with the top 5 reasons why I think this market's going to continue. Everything, basically, including things like energies and metals, have potential to remain firm or strong, and some of these classes may rally quite significantly. That's the stance I'm taking. Now, no, there's a flip stance, the other side, the opposite to that. You have to choose one. You can't flip-flop. So I've chosen the long side in general. But if you do that, and when you do pick a direction, make sure to draw a line in the sand. And when that line is crossed by the price or some other trigger that you might be watching, maybe an indicator or a trend line or something like that, or just the price. If the price breaks down through a certain level, I need a line in the sand where I know that my ideas on the long side are probably incorrect, and that I should be looking to the short side. Those lines in the sand have not yet been crossed, and I'm still on the long side in mind and in position. And so doesn't mean I'm always going to be long, but it does mean that when I enter a trade, it's more likely to be on the long side across the board on most assets. All right, having said all that, we now need to look at the charts. And before I do that, I'll quickly skim back to this thing over here, get rid of that, and try and get the charts up. I need to stop the screen. There we go. And bear with me. I'll be with you in a second with the charts. Here we go. Beautiful. All right, so there we go. Now, Friday was a very bad day. Yes, we'll talk about some of these things. I'll circle around to some of the questions, talking about natural gas. Blew someone's account out. That's very bad. Sorry to hear that, Tommy. Very sorry to hear that, mate. But we'll talk about what you could do to try and rescue that, perhaps. And if you do need some advice, please come and join us in the private group before you lose any further accounts. It'll cost you $100-ish a month, and it'll prevent you from losing your account. That's a pretty good deal, I think. So it was a bad day on natural gas. It was a bad day on crypto as well, by the way, for, generally crypto's not being good. I'm going to go straight into the charts, and I'm going to come to natural gas and energies towards the end. So do stay tuned if that's your bag. That's something that you like to trade. I'm going to skim across quickly from currencies into stocks, into crypto, into metals, and then energies, and then softs and grains, and then a few of these interesting little charts that we have right at the end, which are all grouped together on one page because they don't really have a home. The rest of them do. So here's the dollar index moving down. And as I said, I think this will continue to move down. Please make sure to like and subscribe if you haven't done so. The reason for that is because I've talked about the dollar, and I've talked about many of the things that we'll be covering today in previous live streams and in videos that I released during the week. So if you'd like to know more about all this stuff, and for free, just subscribe to the channel. And if you'd like to do it and spend $1 or $2, join the channel, because you'll get the midweek members only videos, particularly on natural gas and energies and some of the other things, crypto as well. So those are all the options open to you, or you could just stay a YouTube subscriber, but at least do that at the very least, and help us out here at the channel, help us grow. We've been growing very rapidly recently, and we want to keep that momentum going. The dollar has reached the 200-period moving average and the Dixie Moab, this orange block, which is the major level that the dollar broke down through, beginning of the year, really. I thought it would never happen. Eventually it did. We bounced back up to the 50. That's this red line. And we've remained largely under this Dixie Moab. Moab simply means mother of all breaks. It's a very key level on the chart. It's just a silly thing that I say. It's not mother of all bombs. I need to get rid of that, actually. Stop saying it, because it's become a little annoying, or a little tedious maybe. But nevertheless, we got up to the 200-period moving average, retried it again, formed a double top, got through the 200, didn't close above the Dixie Moab top, very interestingly, and drawn in there very specifically at a particular level. And we've now broken down, back down through the 200 and the 20 and the 50, and trying to move down and through that tweezer bottom support just to the left-hand side. So it looks like the dollar's moving down. How far could we get down? Well, I think we'll probably eventually, and it may take a very long time, and it's going to dribble around, but I think eventually we get down to the megaphone bottom and down to this sort of level here where I've got the blob. Also where the 200-period moving average is, the bottom of the megaphone, and that would take us down to about 92 to 93 on the Dixie. We're trading at 98 now, so it's about 6%, 600 pips below us where we could get to. We could. I'm not saying we will. That's what I think we might do. I'm always open to changing my mind. I change my mind quite a lot, and you should do too. Because if you're a trader and you get stuck or fixed on one opinion or idea, or you get a bias in one direction, you'll find that you'll eventually become a slave to that bias, and it will turn around and bite you, perhaps like Tommy, natural gas, did to you the other day on Friday. Once again, I'm very sorry to hear about all of that. But perhaps we can help you rescue that situation in the private group if you'd like to join. So with the dollar moving down, I expect that we'll see some of the other majors moving up, like the euro and the pound. I don't have positions on any of these. I've taken profits on the euro longs, so we're not in this anymore. Might be a good idea to get back into the euro. And I think after forming that double bottom down there, just above the 200-period moving average here on the day chart, we could get this moving up a little bit higher. I'm not a great fan of the euro or the pound necessarily, or any of the fiat currencies, but if I had to pick one, it wouldn't be the euro, I promise you that. And it's not looking strong. It's moved sideways for a good period of this year. Since June this year, we've barely moved. This is a weekly chart. We've fallen out of the channel. We've got through the top 200-period Bollinger Band and the 20-period moving average. We traded well above it for a long time. We're now below the 20-period on the weekly chart, below that little breakout channel, and so on and so forth. Doesn't look great. And I'm not really, although I think this might move up along with the dollar moving down, I'm just not really interested in it. So, and of course, there's all this stuff going on in Europe all the time with not only Ukraine on the doorstep, but lots and lots of political stuff going on in places like France and Germany and other countries closer to the central part of Europe. So lots of difficult stuff. But are there any trading opportunities on currencies if we're not going to trade the euro? Well, probably, maybe. Let's take one that's a long way from the Eurozone, the opposite end of the world. Let's go with the Aussie dollar. Now, the Aussie, I think, is a bit better of a bet because it's still under 0.7, 70 cents, and it's broken out of what looks like a really nice right or falling wedge pattern after forming a massive spike down. And that spike, interestingly, was a currency spike down created when the tariff situation, Liberation Day, unfolded. Currencies were also affected, particularly commodity currencies, because some of the tariffs were directed at commodities, strangely. Things like copper and wheat and so on, and soya. So there we go. I think the Aussie has, and because the Aussie is a commodity currency, loads of gold and metals, rare earth stuff, and all sorts of other commodities, including agricultural stuff, I think it's got a good chance against perhaps, like, say, for the euro, for example. So yeah, we've broken out of there. Big spike low, which is a nice reversal pattern. We got long straight after that. We held that long for a very long time and got, quite frankly, bored of it, took some profit, but I couldn't resist getting back long again on the dip back down towards the 200 period moving average, and we bounced out of there, and we're quite nice now. We've got to get through that swing high, top Bollinger Band, and if we can do that and close above there, and that's at about 0.67, I think we can get up to 0.7 and higher, 0.71 or 0.72. And that's about as high as it'll probably get. I'm also short on the dollar yen, and there's been a lot of talk about the carry trade unwind and the new Prime Minister of Japan, who is a fiscal dove and is keen to stimulate the economy, keep interest, this is what she said, or this is what everyone thought, keep interest rates low, keep this carry trade going, sort of thing, whether they want or not. That was the implication of it. I see the Bitcoin has just broken up. Look at this, folks. I have to just sidetrack here. I've got to get long. So this morning, I've been trading this all day, the whole weekend. The whole weekend, we moved sideways. And then just a few hours ago, we crashed down, broke down that previous swing low. But look where we got to. My line in the sand, the big red line. And you can see I've got actually a note there saying invalidation. We'll come back to this. That's the 61.8% Fibonacci. It's the golden number. And Bitcoin pipped it to the pip, to the bip, to the penny, bounced out. And I was hedging as we dropped down and unhedging as we moved up at break even. And so I've got most of my hedges off already now, but I've got one on. I need to remove that hedge and I need to add some more size. I think this is going up. This 4-hour candle might just be the start of the next move up, quite a big one. So watch out for that massive, massive 4-hour candle on Bitcoin. So coming back to currencies, I'm short on this one. And yes, are we going to get interest rate hikes that will drive this down? It could cause panic, could cause a serious unwinding of the carry trade. Look at all these red lines, red arrows to the left in the middle of your page, actually. These are all carry trade unwinds, strengthening of the yen. And at the same time, we saw massive outflows out of US equities, stocks, metals, crypto, etc., flowing back into the yen, essentially. Now, I think we'll probably see the same sort of thing again. I don't have any big red arrows up here. I've got little baby ones. We're mostly long at the top here with a very tiny position down here, which was hedged. I unhedged it somewhere up at the top here. So we took some profit on the long side, but I've still got that short trade open. Question marks, of course, how high can we go? Is this high enough? If it turns around here, which it has, we've now got a lower high on this very grand scale. Looking at the weekly chart, you'll see what I mean. So there it is. There's the highest high above 160. Next one at about 159, and now we're at 157.5. Call it 158. So lower highs, but no lower lows, and we're now forming what looks like a topping pattern. I think we can get back down here quite easily, back down to 140, down to that level. We'll probably see a massive bounce out of there, and then I think ultimately we'll get back down to about 125 and maybe even lower. I've traded this all the way from, call it 90 yen to the US dollar up to 160. I've traded the whole range of it from since, the year 1990 or something like that up into this current year, 2025. And I've traded it all the way from 80 yen to the US dollar up to 160, doubled basically in that period. So yeah, let's get this moving down. I think we could get down a little bit further, but who knows? It would require the dollar to weaken a little bit. Now, let's go to stocks. Talking about the lines in the sands, I'm long across the board on everything on this page. So if I were you, I'd pause the page, have a look at all my green arrows. These are all long positions, but you won't know the sizing of the positions. Some of them are bigger and some of them are smaller. Generally, the bigger positions are the lower down ones, and the very tiny ones are the higher up ones. Let's start with the NASDAQ. This is just generally moving up, as is the S&P, as is the German 30, as is the Dow, and many of the other indices. We've regained that trend line here on the NASDAQ. I think we could get a lot higher. And I talked to you about my idea for the markets in general. Where are we going on the markets? And I said, we've got this two scenarios. We're going into a bear market any time now, or this bull market is going to continue. I showed you the two scenarios and the reasons why we might have a bull market and the reasons why we might have a bear market. I've chosen the bull side. And I said to you that we need a line in the sand where I will be wrong if the market goes below that line because I'm long. And my line in the sand is down here. I've called it the invalidation line, the red line. And it's this low here, basically this last swing low. If we break down through there, even though we broke down through that Liberation Day, was that the Liberation Day sell-off? No, that was there. Even though we broke down through there, but below that low, we bounce out and we're moving up, and we've got higher highs and higher lows on the daily chart, and my invalidation point is there. I will continue to look to buy, not always going to be long, but I will continue to mostly look to buy as long as we're above 23,800. Is that? Yeah, 23,800 on the NASDAQ. And I have the same sort of idea on the S&P. Also along here, you can see all my green arrows. And by the way, let's go back to the NASDAQ. I didn't give you a target. And the target for the NASDAQ is right up at the top. And I'm going to draw this on, I'm going to show you the weekly chart just to give you a better perspective. I thought we might actually top there. That was the Liberation sell-off. And we performed the swag breadth thrust, massive move up. And we haven't really stopped. Bit of a sell-off over the last number of weeks, bit of a scary sell-off, but only about 10 or 12%. And I think we're aiming for much, much higher and somewhere up into this sort of region over here. And I haven't quite accurately drawn all of that in. I'm going to redo all of this, but I'm looking for Fibonacci projections and also these trend lines, which are following up from the left-hand side. So long and strong on the NASDAQ, same on the S&P. And my line in the sand on the S&P, similar to the NASDAQ, although here we actually have a double bottom. NASDAQ, remember, made a lower low. Here it's a perfect double bottom, and that's the invalidation level. So if we break down below 6,500 on the S&P, I will then start to look to short this market. I'll be looking, I'll be bearish. Right now, as long as we're above there, I remain bullish and we're moving up. This is the day chart. Not a lot of momentum. And so either we're going to just flop down and crash down through that level, or momentum has to pick up. And we've got to get a bit of a wiggle on here and get some nice driving moves. Looks like we're starting to flick up a little bit over here, a little bit on the S&P. Looks quite good. I'm also long on MSTR, the one that everyone loves to hate. I want to get long on Google. I'm long on the German 30 as well. And I don't have a lot of time to go through every single thing here on the charts because we trade a lot of stuff. But the German 30 has got this most beautiful channel, horizontal, perfect horizontal channel. You might call it a bull flag. It's very, very long. It's probably not a bull flag, but it's certainly horizontal, and it's certainly got a very clear top and a very clear bottom. Double bottom, or double, not quite a double bottom, almost, and a multiple top, a flat top. And if we break out through there, we could see a very, very large move up on the German 30, considering what happened after the swag breadth thrust. The invalidation level, line in the sand, is this level here for me, just below 23,000, 22,900. If we get to 22,900 and below and close below there, I'll be looking to the short side from then on, unless we break and close above there again. So that's all of that. A lot of questions and comments coming through, and I will get to them. I promise you as soon as I can, but I would like to just get through most of what we've got to get through. Now, I talked about Bitcoin. For those in the private group, I will be there straight after the stream, and I will be there for the natural gas opening later on. So Tommy and others, honestly, please just sign up for the private group. If you're in trouble, spend $100, come and join us in there, find out how to get out of your problem situation. I'm only saying that because you told us about it. Thank you for your honesty. I appreciate that. I'd like to try and help you if I can. Don't do it again, Tommy, please. Okay, stop doing that. Figure out what went wrong, and if you can't, come and find out from us. Now, this is Bitcoin. As I said, I've been frantically hedging earlier today as we move down. Let's have a look at the 15-minute chart, and I'll show you what happened. This massive sell-off down here just came out of the blue, and it's a little bit like scary because let's see what happened last time this happened. And I'm going to take you back to some of these other sell-offs actually on the 4-hour chart and just show you what sort of scariness this will have invoked in a lot of people. So if we go back to October 15, that's over here, where the sell-off began, somewhere around here. Yeah, it was over there. This is where it started selling off. And then we got these big moves down that carried on weekends, either a Friday or a Sunday, this sort of thing, starting to drive down. And, you know, it gets very, very scary once we're down there. And you think, well, it's going to keep moving down. And look what happened last time. And that was from 120,000. We're now down at 80,000-ish. And we don't want that to happen again. Everyone got scared. I'm sure a lot of people got stopped out, trapped, whatever, on this tiny little micro move down and maybe stuck there. I'm now going to get long. I've actually just unhedged my Bitcoin. I had an order in to unhedge at 90,600. So I'm now unhedged and fully long. And I'll be looking to add more Bitcoin on this 4-hour roll, which takes place in, when does this 4-hour candle close? 16, 20, in half an hour's time. In half an hour's time, I may be looking to add more Bitcoin. So that's Bitcoin. I really like this, and I think we've got a good chance of this moving out of this consolidation zone. The overall picture, I think, is very constructive right now. A lot of people are negative about Bitcoin, not surprisingly, after all the pain that Bitcoin traders have been through after the sell-off from 127-ish down to the lowest point we got to was just above 80,000. Massive move down. But we only got to the 78.6% Fibonacci, just slightly below it here on this day chart. We made a higher low compared to that previous one. And we also made a higher high on the day chart. Yeah, so we bounced out of there, moved up, came back down, made a higher low, and bounced up and made a higher high compared to that previous swing high. We came back down to the 618 fib. That's where we bounced today. And we bounced out of there with a big bullish candle. Going back to the 4-hour chart, you can see where we got to, and that now is my invalidation point. I feel that this level is so strongly, so significant and holding pretty well, and the way we've reacted to it, and the way I'm reading what's going on in the market and what people are saying, what some of the big players, the whales, the banks, and treasuries are saying, and some of the larger influences in the sphere are saying, I think that this might be a bottom. Of course, there is the low further down, closer to 80,000, the absolute low that we got to. But we're now making higher highs and higher lows, and this will be then the second higher low for Bitcoin. That was the first one on the 4-hour. This will be the second one, but only if we make a higher high. We've got to get through the 200 and through that swing high, and that's at 94,200, and the 200-period moving average is there too. Can we get through there? I think we can. It's looking very, very strong. And this 4-hour candle has already bounced from 87.5 to 90.5. So $3,000 down and $3,000 back up again in about 4 or 5 hours. So very, very strong, very powerful. And while I'm busy talking, if you don't mind, I just want to have a quick glance at what's going on here on my broker. I hope you couldn't see that. It doesn't matter. I don't really mind. Right, so that's it. I'm long on Ethereum, XRP. These all follow suit. I'm not worried about these at all. All I care about is what Bitcoin does. These will all follow. I'm sure of that. And I've also got very small tentative positions on ADA, BNB, Litecoin, and Link. Link I like very much. If you are trading some of these alts, this one's bounced up beautifully. Crypto Paul, who will be joining us on Tuesday for his video, live stream, I think, actually on Tuesday. And then we have a live stream on Wednesday with me and Paul. And we'll be talking about some of these, including Link. And Paul pointed this out as a hot pick for one of the altcoins after this breakout. I think it looks fantastic. And I think it's a good coin as well in general. So that one's pretty good. Now, I will come to natural gas straight after this. I want to talk about my gold and silver and platinum and copper trades. And I'm hoping that everyone can hear me. Done what? Yeah. So work's keeping on the side. Okay, mate. Yeah. Anyway, it's really nice to see you. Gold is moving sideways, I suppose. I'm going to say down, but it's not really that down, is it? We try to get to the set. Let me just move this little arrow away. This is super interesting that we sold after attempting to get up to the 78.6% last chance Fibonacci. That's that line at the top here at 4274. And we didn't get there, but we sold anyway. This is a big story because we're also have been long on silver. So short on gold, but long on silver simultaneously. So gold, we've been short on the whole time, and we had to get a little higher than that previous swing high and made a fractionally high, just about touching the 786 fib, which I always thought we would have to get to. If you remember, and those in the private stream, and in the videos that we're doing on YouTube here, if you remember, I've been saying, I think we probably get to the 786, but we didn't quite get there. Maybe we'll have to get there. Maybe we'll have to try again. And we did try again. Still didn't quite get there. So maybe we're still going to get there. But we almost got there and rejected with a double top now. That candle, this is a 4-hour chart. And then this candle where the last candle on Friday, where I added some more shorts. We now have about a 30%, it might be 35% size position on here. So I've got space to add, and I'm not convinced at this point that this is going to move down. And that's why I've been long on silver simultaneously. There is an idea, of course, that if gold moves up, we could move up to the underside of the long-term trend line. It's not that long, although it goes back to August, so it's a fairly decent trend line, which we broke down through. So it's the first point of breakdown. We broke down through it. We're still below it. And if we retest it from underneath, in other words, the breakout pullback, it could be that we did something that we do, not did, something like that, right? And that would be then, and I think we're going down to the next red trend line, but we'll talk about that. If we get something like that, we would then have to necessarily make a much higher high on gold, but we'd still be below the trend line, and therefore still, from that perspective, bearish. My ultimate target for gold, ultimate idea, is that it's an ongoing growth investment asset. It will carry on getting stronger. But as gold often does and is likely to do, it's probably going to have to pull back down into some form of support. The best form of support is the breakout level at this orange triangle in the middle, where we broke out through after months and months of consolidation and then sparked this rally off. And the rally was actually equal to the approach to the flag, and that's how we measured the exit point. So if we take the approach to the flag, in other words, the flag pole, let's make it green just for consistency, and then copy that and draw it onto, I'm not going to copy it, I'm going to just drag it and draw it onto where we exit the lowest point of the exit point of the flag, not flag, rising triangle, ascending triangle. It takes us up to around about where we are currently trading. Slightly higher, just a little bit higher than that, but we didn't quite get there. We got to the 78.6. So my strategy on gold is to remain short unless otherwise proven. And I think basically we can use the 786 here, and the price is at 4275, call it 4280. A close above 4280 would mean I'm wrong, probably, and that this will move up to the high and then possibly higher. But if this moves down, I think the next stop, if we can get through all these moves, well, the 20 and the 50 and this horizontal support, the next stop will be that swing low at 3882, or more likely, this rising longer term trend line, which is longer than the one that we were talking about earlier. And that would be down, let's say we drop straight down there in the next few weeks, it'd be down at 3832, but I think we could get down to 3,500 and the top of this breakout zone, which we have not yet revisited. So with all things in trading, when we get a big, strong breakout and we don't retest the breakout immediately, there's a very good possibility that we'll come back at some time in the future, retest the breakout level of this triangle, which now becomes a support level, and then we'll bounce out of there and move up to new all-time highs. That's my strategy on gold. If we can get down to 3.5, we're going to try. If we can't, we can't. Okay, we may have to move up, but let's see. But in lieu of that, or rather in as a, I suppose, a protection against a short trade on gold in a massive rising uptrend, it's never a good idea, of course, to be selling, picking tops in a massive rally. And the only reason I am able and would do that would be if I was hedged or had some form of protection. And therefore, because we got short on gold, I got long on silver simultaneously. We got long on silver at the same time down here at $50, and silver moved all the way up to almost $60. We got out at 59. That's that gray arrow there. And I'm now no longer in a trade. This we actually hedged. And so we have the flexibility of getting in or out of this trade or angling it in one direction or the other. And so we took, a massive profit on silver, long on silver. And at the same time, we've been short on gold the entire time. It's not blown out through the top like silver did. It's not made a higher high, fractionally maybe, just to the 786, and it's not really doing very much. If anything, it's looking weak. Late on Friday, let's look at late Friday's action, and everyone said, there goes gold. It's on its way up. It's going to the moon. There it goes. And this was Friday's trading, and there it was, right? This is all Friday. Gold, gold, gold. There it goes. Wonderful move, 15-minute chart, and at precisely 17:30, which is 1 hour after the market opened on Friday, the New York market opened, it crashed down all the way from 4258 down to 4198. So $50 down in 15 minutes. Massive move down. Doesn't look that much on the day chart because the day chart is very volatile at the moment. So these moves that look tiny on the day chart are actually quite big. All right, so just getting my screen back on there. All right, that's gold and silver. So I'm just still short on gold. I think we're going to get that move down. I don't know how far we can get. And then copper, I'm hedged. I was, we were long from the bottom, got short there, got long at the bottom. Now we're short again, and then we had to get hedged because it didn't move down; it moved up instead. So we're just fully hedged on copper. It's a good sign that copper's moving up generally, because if copper was to crash like it did over there on the left-hand side, that would normally be in conjunction with the markets crashing, and Dr. Copper would be saying, it's pretty much all over for the markets if we see that sort of thing over there. But copper's moving up steadily and slowly, and I'd like to try and get long. I did try and get long on Friday. I have an order still in place to purchase at 529. We're currently trading at 546. So if we can get back to 529, once again, we've had the breakout, but no pullback. Well, not big enough anyway. We did pull back to the 20-period moving average, but not down to the breakout level. But we did break, we probably pulled back enough actually. It's a double top there. We pulled back to the double top and the 20-period, and we're moving up. So I need to get long on copper, but I don't know how to. We'll figure it out. We do have a long on copper, by the way, anyway, because we're hedged. So I've got a short and a long. And when we get to the top, whenever that might be, I can still take the profit on the long trade that I've got open. The short trade will be more negative by that point, but these are not big positions. That doesn't really matter to me. And then I could look to add some shorts, some more further shorts to that short position. I don't think copper is going to stay at this level forever. It's really expensive. It's very high, but it's in demand. It's not rare, but it's in demand, and it's used in just about everything that we're doing. I've got nothing on platinum. Don't like it very much. Now let's talk about natural gas. I got a little birdie in my ear in our private group earlier. I'm going to quickly open that up. You won't be able to see it, but I'm going to find out who it was. Oh, it was Vishesh. Vishesh, I don't know if you were here in the stream, but thank you very much for your comment on the weather in the private group. And it seems like warmer weather forecasts are emerging from models, and that we may gap down on the open in a few hours' time tonight. Now, what does that mean? Well, in terms of my positioning, I'm short, several small shorts here, one very small short here. We took some size off. We hedged, unhedged, took some size off. In other words, got rid of the hedge, but also took some risk off in terms of sizing. And here we are. Now, I'm still looking to get short. Overall, I think natural gas has moved into a higher range, and we're at the top of that range now. So we need to come back down to get into the buying zone for the higher range. And I'm going to roughly draw it like, there's so many lines on this chart, I need to get rid of them. But the rough range is between $5 and $3 now. And prior to this, last year and the year before that, and half of the year before that, the range was like $1.50 to $3 or $3.20 thereabouts. And now I think we're from $3.20 up to $5 or thereabouts. So we're in the upper range, and I think natural gas has got a natural bid underneath it because of demand created by AI basically, and our general love for energy and demand for energy, which is growing all the time, and the fact that natural gas is actually not quite as bad, perhaps, as coal, diesel, oil, etc. Although it does leak methane all over the show, which is not good for the environment at all. But it might be better. I don't know. I think there's dispute about that too. It's an interim energy product. People think it's not going to be around forever. It's not good for the environment. But I think there's ongoing demand for it at the moment. So I think we're at the top end of this range. Now, here's a very interesting little channel, which I didn't delete, which I'm glad I didn't. This channel, the yellow one running up the center of the page, started off at beginning of 2023. This is a weekly chart. And it was a channel just for that whole year. And we fell out of it down into the lower part of the range. And now we've moved up into the upper part of the range. Notice that when we approach that channel, it's relatively meaningless, actually. It shouldn't, it's not something that we should be concerned about. It's so old, and it's not really a technical thing that we would look at normally. But when we approached it on the last occasion, we rejected from that channel center line, this is the weekly chart, and fell back down. And now we've moved up, and notice how we rejected from the channel lower trend line. We touched it and fell back down sharply on Friday. This is the weekly chart. Let's look at the daily chart. And you can see that we almost touched that channel. There's the same channel, and it goes back all the way back into 2023. As you can see, we were trading in this channel throughout this year. We were buying the bottoms, selling the tops throughout that whole period. We broke down through the bottom of the channel. We've traded underneath it in the lower part of the range. Natural gas has now, I think, naturally moved up, excuse the pun, into the higher part of the range between roughly $3 and $5. But we've got up to that channel line underneath it again and rejected very sharply on Friday. This is the day chart. Let's go to the 4-hour chart. Let's keep on zooming in and digging deeper. What happened? We got a big spike up, not quite to the top of that. This is the same channel, the same line that we're looking at. Didn't quite get there, but pretty damn close. We formed a spike high reversal, or a wick high, you might call it, and then a little spike high to the downside, a spike low to the downside. So that's a one up, one down reversal pattern in the face of news. And I'm going to confirm this as soon as we finish the stream and do some more research on it. But ostensibly in the face of news that warmer weather might be approaching, and that we might have a top here on natural gas at a very high level, at the top of the range, underneath a very long-term channel that we've rejected from multiple times before, and with weather models indicating that demand might drop off because of warmer weather rather than cooler weather. So I remain short on natural gas, and of course we'll have to decide what to do when the market opens in a few hours' time. And I will be communicating, as always, every Sunday with my private group, letting them know what trades I'm going to be taking myself. We've had a fantastic run on natural gas. This contract so far, this current contract, we've made a little bit of money, but not those big swings that we normally get per contract. We look for one good swing trade per contract. We haven't had that on this contract yet, but it's still early days, and there's plenty of time to go. Please ask any questions if you have further questions on that. Staying on the energies page, I'm still long on uranium. They're my two entry positions. Uranium we talked about in the last live stream in detail. I'm not going to do that in this one. Just to say we could go a lot higher on the URA ETF, and we could go a lot higher on lithium. Actually, I will show you that very quickly. Without expanding the charts, I'll zoom in very quickly onto the uranium chart. Look how high we could go to the left-hand side. We've got a beautiful rounded bottom here with dramatic acceleration out. Coming back a bit, we may have to come back into the blob or the block 50-day moving average down here. Bear in mind that a little bit of a pullback here wouldn't go amiss. In fact, I'm going to open the chart up. So a bit of a pullback into that zone would not be amiss, but we're long already anyway. This is the weekly chart. And if we look at the daily chart, you can see where we got long. So, we've got order blocks above us, but, and the 50-period moving average shown on the day chart. That's uranium. Lithium, also plenty of opportunity for this to go much, much higher. I'll show you this on the longer term chart too. Look at this on the weekly chart. And there's lithium. We're trading at around about 55, and this has been as high as 96. Plenty of opportunity for that to go up too, all in line with the AI, battery, natural gas, energy, copper, data center theme, all part of the same story. And that's that. Now, we're still short on WTI oil, or that is ticking up. And I keep on telling you and warning you that as we move down into lower prices on WTI and crude oil in general, as we get closer to $50, and should we penetrate 50, things will get crazy and wild. Naturally, we're into the natural trading range of oil. Could we get below, 52, somewhere down? The natural and very important and powerful support is actually at about $50, just above $50. We're currently trading at 59. So I think another $9 or $10 down, maybe just below $50, and then a big bounce out of there could take a sharp short squeeze right back into some of these high levels and these order blocks and the point of control. This is a weekly chart. Look where the point of control is. We're below it now, and so we're out. We're sort of down below the Gaussian curve or normal curve, normal distribution, if you will. So yeah, short on oil, and I'll be looking to short. We'll be short. We are short on natural gas as well. Not often short on both of them simultaneously because quite frequently they move in different directions. So it could well be that one of these is completely wrong and the other one is correct. We'll find out soon enough in about 3 or 4 hours' time when this market opens up. All right, folks, I've been through a lot of things there. I haven't got to the softs and grains yet. And if there is interest in softs and grains, we'll cover some of those too. Just to say, I'm still short on coffee, and I'm still long on cotton, and still long on lithium and sugar. Lithium on the wrong page. And then I said I'd talk about some of these funny ones, particularly quickly, the ones I normally look at. Bitcoin gold, a really interesting chart. That's not it. A really interesting chart. And we've done a whole video on this, so it's probably not worthwhile talking about it again. On this weekly chart, I think we've reached support on Bitcoin gold at the 300-period moving average. That's it there. On the log scale, excuse me, 300-period moving average down there, we've come down into support, and we're trying to bounce out of there like most of the times that we do after the correct amount of correction this time, considering the decreasing rally and correction scenario. What has happened here on the weekly chart, we've formed a tweezer bottom, bouncing out of there. Looks really good. Looks really good on Bitcoin gold, and that really does need to hold if we're going to see Bitcoin dollar moving up from here. And on day chart, yeah, a bit floppy and messy, but a nice big bullish engulfing candle in the center of that pattern. And then there's Bitcoin dominance ticking up a little bit. I'm not going to talk about that today. And then the ZAR, we spoke about this as well. There's a lot of support for the South African rand for some odd reason, not all that odd because of commodity prices. And there's also people snooping around from various countries and continents looking for oil, gas, and rare earth minerals in and around South Africa, in Southern Africa. And as this is all going on, it's being pretty supportive of the rand, uncharacteristically so. I don't believe this. We've got a falling wedge. I don't think the rand deserves to be this strong. Dollar to be this weak against the rand, although we may have to get further down into this wedge before we see any action. So allow for more of this sort of thing, but at some point we'll bounce off this channel wedge line at the bottom and bounce out of there. I don't know when, and I'm very tired of this trade, and it costs money every single night because of the interest rate differential. It costs me money to hold this trade too, so it's not my favorite at the moment. And I think I've covered almost everything. I want to quickly go back to Bitcoin and have a look at this gargantuan rally, almost at 91,000 now. And just a few minutes ago, I say minutes, I mean hours, but I'm being exaggeratory. We were down at 87. We're now back at 91. Unbelievable. Okay, folks, I'm going to get to some of the comments and questions. It's been quite a long stream so far. We haven't even got to questions, so I'll try and get to some of those. It's really good to have all of you here. I really appreciate it, folks, and I don't take it for granted. But please do humor me with a like and subscribe. Just click the subscribe button. It doesn't cost you anything, but it really helps the channel grow. And we want this channel to grow bigger and better. And we want to be one of the premier sources for information. You'll know the favorite channels that you follow that are slightly bigger, some of them quite a lot bigger than ours. I won't mention them. FX Evolution maybe is one of them. They have about quite a lot more subscribers, but they started off at with the same size a long time before us, but the same size, and they grew at roughly the same rate. So I think we could get to that sort of size. I don't know how many subscribers they got, but just by subscribing, it really helps. So I'd appreciate that. So we said hello to a few people. Poland, we've said hello to most of you already. Augusto, we said hello. And Gareth, yeah, Gareth, great wave. We're talking about Nazare. Gareth, good waves today, by the way. Not good waves, good weather today. Nat gas Monday down. Yeah, I think so, Kalish. We talked about that at the open. I think we're all expecting a bit of a gap down on natural gas. Good day, Keith and Amon. Jazz, nice to see you. Thanks for joining us. And Andre, all interesting natural gas. Me too. I still have short entry at 4.8. Too early. Yeah, too early, mate. Too early. 4.9. Too early, guys. Too early. I don't know what my account, my entry levels are. Let's quickly have a look at that. I'm going to get that off the screen first. So that's too depressing. We'll come back to that. Get that off the screen straight away. Let's quickly have a look where we got short. Yeah, so also in the 4.9s, below $5, I think. No, sorry. We're around $5 to $5.10 short. We're currently at 5.32. So yeah, 20 cents out of the money, but I've still got plenty of opportunity to add more size to this. So these are relatively tentative positions. And we made a lot of money on the previous contracts, 3 or 4 or 5 or 6 of the previous contracts we've done really, really well on. One of them we made $1.20 on the contract, $1.20 on a pretty decent sized position. So we haven't had that on this contract yet, but I'm short from about $5 and some change. So you're not much, that much lower than I am, and it may just even we could gap down 10 or 20 cents if the weather's really that sort of if it really warms up. Natural gas blew my account on Friday. Stupid enough, took my hedges off too early. Yeah, hedges. You got to be really careful, Tommy, with hedges. If you're going to hedge and you're not familiar or not practice at hedging, it becomes tricky. And most of the problem is most people take their hedges off too early. Be quick to hedge and slow to remove the hedge. Rule of thumb. Just remember that. Be very quick to hedge. Hedge as early as possible. There's no real damage that can be done by hedging. If you hedge early, when your position size is small, hasn't moved too far, and you hedge it, it really makes no difference. You're sort of locked in a tiny loss, that's it. And you can decide what to do thereafter. If you leave your hedge way too late, and if you build and add to your position, adding to a losing position, and then eventually going, if I hold this trade any longer, I'm going to wipe out my account. I've got a hedge right now. And then you hedge, you've hedged at the wrong place. You've hedged at the extreme, at an extreme distance away from where you got in for a start. You've probably added a few extra size positions along the way, and your account is dwindling way too fast. That's the sort of thing that happens. Be quick to hedge, slow to unhedge. And I only hedge, for example, I only unhedged my natural gas, I only unhedged my Bitcoin long trade once it had moved up by $3,000. I took that $3,000 loss on a small position, neither here nor there really, but it's different when you're trading a large natural gas position. But nevertheless, I waited for $3,000 for the price to move up that much before I unhedged my position because of the mantra. Be quick to hedge, slow to unhedge. If you unhedge too fast, you're either going to have to rehedge straight away because you realize you took it off too early, and the moment you unhedge, you're guaranteed that the market will go back against you in the wrong direction again. The moment you do it, that's true. It's Murphy's law. Murphy's everywhere, right? So the moment you hedge, you start seeing it going the wrong way again, and you have to either hedge or you panic or you don't know what to do at that point. And maybe you've hedged so many times that you're just sick and tired of it. All sorts of things can go on in your mind. Be very, very careful. Be quick to hedge, slow to unhedge. Good day, Marcin. Andre, agree. Very bad day for shorts, but I hope it will drop rapidly. Expect 4.2 to take profit. Yeah. Sorry for joining late. No problem, Vishesh. We talked about you, and we got all your gen in the chat. Wednesday, Trump tariff Supreme Court ruling. Yes, that too. All unknown issues and variables that we cannot possibly foresee or make sense of until we hear what actually happens. Good evening, Tanil. Been a while to join. Sorry to hear those who blew their account on Friday in natural gas. I was definitely there, but joined the community and you've learned so much. So thank you, Tanil. So there's a good example of someone who may have blown their account if they weren't part of our trading community, but did not do so. I hope not. So I hope not, Tanil. Damajan, nice to see you as well. Being in Germany and living a witness of the current German decline, I can't see any base for a strong push upwards, rather the other way around. Yeah, you're talking about the euro, Damajan. Exactly. I don't have any desire to purchase the euro. Silver. We talk about silver. I don't know what's going to happen with silver. I'll take my information from gold, Marek. I don't know. So I'm silver. I'm not in it. I'm hedged basically. I think I took profit on Friday, or most of the profit, but I'm not in a position whether it's hedged or I've taken profit. I'm not in a silver trade. But I want to see what gold does, and if gold starts moving up, I might get long on silver. If gold starts moving down, I might get short on silver. They will probably move in the same direction roughly, and particularly if they start moving down, silver may move down faster than gold because it moves up faster than gold too. It's more volatile, it's more elastic, and so I might get either direction depending on what gold does. Because I'm short on gold, I'm probably inclined to be looking to sell silver, but I don't know how the gold trade is going to work out. So when I find out how the gold trade goes, I'll then decide what to do with silver. Thanks for the video, James says. Done what? Work is keeping him on the sidelines. No worries, mate. Just pop in whenever you can. It's great to see you. It really is. And you're welcome anytime. So just pop in, say hello. Target on natural gas. Andre, I'm aiming for 375. 375 on natural gas. If we can't get that low, probably 425 or $4. So targets for natural gas, 425, maybe 420, $4, yeah, possibly 375, maybe at a stretch, maybe if we're really lucky, and you need a lot of luck in trading. So 375 maybe is a fair target for natural gas, but we'll probably get out or hedge or take profit or do something at 425 and $4. Vishesh here as always. KM. Oh, okay. All right, mate. Okay, thanks. I appreciate that. So it was KM who said about the weather. Thanks for the mention. No problem. We'll might as well just mention you anyway. Coffee. You want to talk about coffee? All right, let's talk about coffee. Lucky, just for you, mate. Let's talk about this quickly. I've got 2 minutes left because I've got to go and do some other stuff. Coffee, I'm still short on, still long on sugar, long on cotton, and short on coffee. Those are my 3 trades on. And coffee, is it going to move down? Probably. I don't know. It's faffing around. We've been short, been selling coffee every time we get up into these highs. We've sold again. We've taken profit on all of these previous ones. We're short again now. I've got 2 arrows. One's moving up, one's moving down. I don't know which one's going to go, but most probably down. It's very expensive, overbought still. And after that big run up, after the rollover and more weather and news and politics came into the whole thing, we're now just fiddling around. Could be a bull flag, and it's possible that we could get over $450, 450. I can't remember the units. Just someone in the chat remind me. I've just forgotten the actual measurement unit for the coffee price. Anyway, we could move higher, move up to new all-time highs if we follow that sort of path. But I think it's unlikely. And coffee should be actually much lower down at about 200 to 250 in that region. So yeah, I'm still short on coffee. But like many of these softs and grains, if we do see the dollar coming off and we do see QE into what's left of this year and into next year, and we see the dollar coming down, we see liquidity, flowing in, that could also prop up commodity prices. I'm not saying coffee will move up, but we could see a rally in things like wheat and staples, wheat, corn, cotton, soya, sugar. And then it's possible as well that we could see a rally in the coffee price. These are gradual, long-term things, and we'll see it as it happens. I wouldn't worry about it too much. But for now, still short on coffee. Yeah. All right. Now, that was that. You're interested in what, Lucky? How many years of experience about trading natural gas? Omkar, about, I'd say 22, roughly, maybe 20, maybe 23. I don't know, somewhere around there. Probably about 10 years after I started trading. I started trading Forex only, mostly the Forex majors, Euro, Pound, Swissy, sometimes the Aussie and the Yen. And then I moved into FX miners and exotics thereafter, and then into stocks, and then into commodities. And by the time I got into commodities, it was about 10 years after I started trading, probably around about 2007, something like that, maybe 2008, in that region. Coffee we've talked about. So there we go. Ola Prime. I'm not back on. My contract is over at Ola Prime Omkar. I'm not going to be doing further contract work for them. So that's come to an end. So I enjoyed my time there. It was good, and able to help them get their show going to some extent. To some extent. James, for natural gas trading, will you consider trading futures, control of different months, shorting the January long? Yeah, I only trade the front month, JY. I don't trade the forward months. I only trade the front month. My broker, the reason is because my broker only allows me to trade the front month. But I've got little interest in trading the forward months. Not really. I think keep it simple. Trade what's in front of you, is my opinion. Is copper still a buy? Well, we talked about that make way. I think it might be, but I don't know. I prefer copper to keep moving up, to be honest. And so I'd like to get long on copper. I'm looking for an opportunity to get long, as I said to you earlier. Thanks a lot. A good live. Thank you, Andre. Appreciate it. Best way to trade natural gas options. Take my natural gas trading course. That's the best way to trade MT. Sorry, it's a complicated subject. I can't tell you on a live stream in 2 minutes. Impossible. If you want to trade natural gas, learn how to do it properly. I've got a course available. It's not expensive. You can go and download it right now. Pay for it, download it, learn how to trade natural gas. Links on the website. Comment about the Australian 200 and Japanese. Yeah, Damajan, we'll talk about that next time, mate. And maybe on Wednesday, if you join us in the members live stream on Wednesday with Paul, we can talk about that. Sure, no problem. But I've run out of time now. And I haven't had a look at them, to be honest. So I don't know. I would be commenting without being properly informed. But we can talk about it on Wednesday if you bring it up. And folks, I will be seeing you tomorrow for a natural gas video. Stay tuned for that. I'll be releasing a video tomorrow morning on natural gas once we've seen the open, once we've seen the weather, once we've seen how things have settled down, and the first couple of candles have started. I will be making a video for YouTube for subscribers only. Not really, because it's available to everyone, but I'm going to say that just to encourage you to subscribe. So the natural gas video on Monday, subscribers only. All you got to do is subscribe. It's free. I'm joking, of course. Anyone can watch it. And then on Tuesday, Paul will be doing his live or video on crypto. Can't remember if it's live or if he's doing a live stream. I think he might be, but certainly a crypto update. And then on Wednesday, it's me and Paul live. Thursday, more crypto. Friday, a live video from me, and then Sunday live streams every Sunday. So we've got the whole week except for Saturday. So you can take Saturday off and take a breather. But every single day for every week, the entire week, we have a show on. So I'm looking forward to seeing you in every single show. All right, wonderful session. Thank you, Omkar. I think it was a pretty good session. I'm feeling a little tired and worn out by Bitcoin over this last couple of weeks, but I've taken thousands of trades, literally thousands on I trade Bitcoin in 3 ways. I've got a soft wallet at Kraken. I've got a hard wallet, cold storage, and I've got a trading account, which I trade a little bit on leverage on Bitcoin. And that's the account that I've had to manage. Any Bitcoin on leverage will have been under stress. So if you manage to get through this all, like I have, not without some lack of sleep occasionally, not without some stress, but I've got through it by being diligent, working hard, staying up, working those hedges, protecting my capital, and you should do the same. Not only for Bitcoin, natural gas. Protect your capital at all costs. If you don't know how to do that, come and join us in the live stream. Good session. Yes, I think so. Thank you, Lucky. Thank you, everyone. It's really nice to see you all. And Make sure to watch the natural gas video on Monday for subscribers only, which I will release as soon as we know what the news is, how we open, what candles we get, what the weather's going to be like, and where the market's moving. And then, of course, all of our content throughout the week next week, including live streams. And Crypto Paul will be on 3 times next week. So if you're into crypto, you've got the expert right here on this channel. Okay, folks, have a great Sunday evening. I'll see you a bit later on. For those in the live, in the private group, I'll see you there shortly. Take care. Bye, everyone. I'm looking for the right button. I think I found it. Take care. Bye-bye.